The word Denver means a lot of different things to a lot of different people because Denver is a very diverse area. So in our analysis of Denver, what we're talking about here is the downtown Denver market. We're not talking submarkets. We're not talking outside of that downtown area, because that downtown area of Denver is a very unique area. So let me give you an analysis, our analysis, as Denver, downtown Denver, as far as the investment potential that we recommend to real estate investors. Do you want to own downtown or not? So here are some pros. Number one, it is a very growing market, right? There's an influx of people coming every single month into the Denver market. People are moving here, and they're moving here from the East Coast. They're moving here from the West Coast. Why? Because compared to those markets, we're cheap. We're still affordable. So they see Denver as a great place. We've got a great geographic area. The mountains are a huge draw. Our weather is a huge draw. The geography here is. So people are still coming to the Denver area. Businesses are transferring here because even though we don't feel like it, we've got a lower cost of living as compared to East Coast and as compared to West Coast. Now, second thing would be that influx of new residents. They're coming month in, month out. They're here month after month after month, and it does not show a lot of signs of slowing down. Third, and I don't even need to say it, right? The amenities are amazing. Denver has more amenities, be they the arts, restaurants, close to the mountains, proximity, skiing, DIA. The amenities that Denver offers are just about impossible to beat in any of the other submarkets in Colorado and in many states nationally. That's a big draw. Fourth benefit is it does have lower than average crime rate. It just does, because it's Denver. It's drawing in those type of young urban individuals that want to live in that area. So the crime rate's been dropping in Denver the last several years. Now, before you get too excited, there are some negatives about the downtown Denver market. And number one, it's got a higher cost of living. Right? It's expensive to live there. Prices are high in downtown Denver. You're paying a significant premium to buy, to own, to rent in the downtown market. So that's kind of a negative because you're paying a premium. You're not getting anything on sale right now in the downtown Denver market. Negative number two, lots of new construction. And could that be overbuilding? Our analysis is simply yes. I think Denver is on the verge of overbuilding in the downtown market. And if you don't believe me, drive downtown, count the number of cranes you see in that market. A lot of cranes means a lot of new construction. We've seen this play out in that rental rates are actually dropping now. They're dropping in the downtown Denver market. Rental rates are dropping, vacancy rates are going up because they're building so much new housing stock. This morning, before I came in and recorded this video, I was reading the Wall Street Journal. And wouldn't you know it, page 2 of the Wall Street Journal had an article about the Denver housing market. And the headline says this: Denver's fix for luxury glut. Now hold on, pause right there. Denver's fix. Denver has to fix something because why? We have a luxury glut. And the whole point is all of the new stuff being built in Denver are luxury Class A properties, and we have a glut of those. We can't fill them. There's too many. And the answer to that, according to this article, is subsidies. The government wants to subsidize Class A properties. Why? Because the landlords can't fill them up. Now that's scary stuff. That is classic signs of overbuilding. And here's a couple of things out of this article that are so interesting. It says this: Denver has added 12,000 apartments since 2015. Okay, that's hard to judge. Well, what is that? Is that good or bad? It was 12,000 since 2015. And an additional 22,000 are under construction right now. 22,000. Now listen, here's the kicker. More than 90% of those units are considered luxury. 90% of those, which is virtually all of them, 9 out of 10, are Class A. And the problem with Class A is it's high-end stuff. That means Class A has the little dog park. It has the weight room. It has the pool. It has the workout facility. It has all of these Class A things. So they're only appealing to one segment of the market, the Class A market. Those are the only individuals that can afford that. This article goes on to say that there are currently 16,000 vacant units in Metro Denver, downtown, up from 5,500 3 years ago. So the number of vacant units has quadrupled in the last 3 years in Denver. We're not being able to fill these luxury units. And that's why you're seeing some things like free rent, $99 deposits, a couple months free, all sorts of incentives to draw tenants into these Class A buildings. Big deal. It's a big, big negative in our view. Negative number 3, the cap rate is lower. Your cap rate is the rate of return. You're not going to get as much bang for your buck as investing in Denver. We give Denver an A- overall. I would not buy a condo or a townhome in the downtown Denver market right now. Now, single family, that's a little bit different. I think those are safe, but I think we have overbuilt, and the effects of that is just now starting to be felt in the Denver market. So we still think it's a good long-term play if you get the right type of property. This is an A- if you get a single family home. If it's a condo townhome in the downtown market, we wouldn't even give it an A. We'd probably give it a C. We would not recommend looking there. But consider Denver for a long-term play, but consider single family because that oversupply of Class A properties is going to hurt the market overall. We really strongly believe that.